So one thing that Salesforce has been able to do well is to increase revenue, and part of the reason the stock price has struggled here is because revenue growth has decelerated meaningfully. Over the previous decade or so, the company's total revenue has increased from 5.4 billion all the way up to 39.5 billion. That's good for a compounded annual growth rate of about 21%. But in recent quarters, Salesforce has reported revenue growth closer to 10% and sometimes lower than 10%. Of course, another big risk with Salesforce is that the company hasn't been a very good capital allocator. What I mean by that is if you look at its return on invested capital over the previous decade, it's not very good. The ROIC has fallen from 2.7% all the way down to roughly 0.2% in 2019 and stayed at those low levels for a couple of years before in 2022, if you remember, Salesforce announced that huge cost-cutting effort where they let go of thousands of workers. And since that effort, its profit margins and returns on invested capital have improved meaningfully, growing from 0.6% to 7.8% and still on the rise. One of the reasons why Salesforce ROIC has been so low, in my opinion, is because it's made ineffective acquisitions and paid too much for the acquisitions and didn't realize as much of the synergies it expected to realize when it made those acquisitions. And so now you have this situation where Salesforce is trading at near the cheapest valuation it's ever traded for when measuring on the forward price to earnings basis. Salesforce is trading at a forward PE of 20, which is the lowest it's been or near the lowest it's been all year long here in 2025 and near the lowest it's been even if you go back more years to look at this forward PE data. I also like to look at valuation using my own proprietary discounted cash flow valuation model, and this also shows that the stock is undervalued. The intrinsic value per share, which I updated today, is $339. That's the fair value I believe this business is worth. The current market price is $244. So there's a meaningful undervaluation here, even if I apply, which I always do, a margin of safety to my discounted cash flow valuation model of 5 to 10%. There's still room for upside here in Salesforce stock. So I last updated this buy recommendation on September 3rd, and today I will reiterate that I still think this stock is a buy at the current market prices. Of course, you're getting the business with the elevated risk surrounding the transition to artificial intelligence, but I think the risk versus reward is worthwhile.
Click the link below to watch the full video.